Good morning, everyone, and welcome to the Ankerstar Wealth Market Update. I'm your host, Allison Ankerstar, and today we'll be talking about the May inflation report, whether or not we test new lows, and the latest on DocuSign. But before we begin, as a reminder, this is a financial education presentation, should not be construed as personal financial advice. Full disclaimer information is available at ankerstarwealth.com. Good morning, Steve. The May inflation report came in at 8.6%, and the markets are reacting hard. What's next for the market, and are we going to test new lows in the market?
Well, good morning, everybody. Thank you for that intro, Allison. And you notice I don't have my black flight suit on this morning. I have red on to kind of capture what's going on in the markets today. Or actually, it's more of the Alabama Roll Tide Friday. But certainly today is going to be an ugly day in the market. Dow down over 500 points, as you can see it from the May inflation number. So let's talk about how bad it was and kind of talk about the inflation narrative for 2022. So we started the year, we had inflation's a problem. So that's a disease. And then we had the Fed raising rates as the cure. And then we had the Russia-Ukraine thing, which was hopefully going to last week's. No, it's on into months with no real end in sight. So that's kind of where we are. So the inflation, we had thought that, and I would say most economists had thought that we were past peak inflation, meaning as these numbers come in month over month, that they had started to taper off and that we were on our way to a cure, if you will. The Fed has done a fantastic job of forecasting their rate hikes, saying exactly what they're going to do, and then following through and doing that. And I asked at a recent conference last week, would the Fed ever consider, because inflation is raging so bad, would the Fed consider raising rates outside of their standard 6-week meeting cycle? And the answer from the board that was there, the panel, if you will, was pretty much a no across the board, because that would shock the markets too much. They can still go with the 50 basis point raise until they need to drop that to 25, but probably raise rates at every meeting this year. Right. So that puts us up around that 2.5 to 3% by the end of 2022. There will be people saying that that's not nearly, enough, fast enough, if you will. In other words, that's a good number, but we need to bring that forward. But I don't think we're going to see that. I think they're going to go on their steady pace. So that's the first part of it. But when you look at this number, 8.6% inflation in May versus 8.3 expected. I mean, both those are ridiculously high numbers, but certainly when you have a ridiculously high bar at 8.3%, which that means 8.1% would have been good news, right? But no, it's not 8.1%. It's 8.6%. So it's worse than a terrible number expected there. And again, 40-year high, if you will. So what's that going to do to the overall market? Well, as you've already seen this morning, we're a little bit running late, so the market is open. But yeah, down 1.5% or so. Now, I do think that most of this is baked in. So we'll pull up the NASDAQ here. If you've been following the markets closely, you will notice that we did bounce from the low that we had in the middle of May. So just a couple of weeks ago, came all the way up here. And I know that's not all the way, so maybe you don't like that, but we did bounce some, right? So we had some recovery. And now here we are this morning down here at the 11.5 level. We was 11.3 or so was where the bottom was most recently from a few weeks ago. I do not think we retest that. I think that holds. I think that, this is going to keep us in that bathtub we keep talking about. As far as, we're not going any lower, but there's no real catalyst to go higher, which is, one of the things you talk about when you talk about an individual stock, same with the stock market. So we're going to stay in that bathtub a little bit longer now, which may drag it on closer to the elections before things start turning around going better. So how do you handle that from the strategy perspective? It can seem like you're flushing money down the toilet, right? When you're on you're putting in 500 a month or 1,000 a month, or you're putting in, 2,000 a month into your 401k. But just because it seems to go down every time money leaves your account and goes into your brokerage account, it drops, right? So it can feel like that, but that's not what's happening. If you back out, and look at a 5-year perspective, we had this huge run up. We saw the same sort of sell off, except for this one's even worse than the 2020 sell off as far as the total number of points, not percentage, but points. So yeah, pretty significant repricing of everything. So if if you expand this out to the future, which we don't have a crystal ball, but if we're up here at Dow 20,000, or NASDAQ 20,000 here, and we're down at 11 now, you're going to wish you had bought that entire time, right? So overall, for strategy, if you have a monthly piece coming in, now's the time to do it. We're still kind of in that in the stay calm, pass the ammo phase, or hold the line phase. We're not exactly at the lock and load moment. We would need to come down here all the way to around 10,000 or so. That's more like a 35% sell off for the year to be able to do the lock and load and buy everything in sight. We're not there yet. So really, you're just keep doing what you're doing. For mental health, if you need to look away for a little while, then do so. Check back Monday, if you will. But overall, that's where we are. I don't think we test a new low there. And we'll be back off to starting to stay in the bathtub a little bit longer, but maybe start working our way higher here in months, but probably not weeks, to be honest.
Last, DocuSign received 3 downgrades this morning and is down over 20%. Is ticker DOCU a buy, sell, or hold?
It's a strong sell. There's really, the DocuSign's amazing. I use it literally every day with clients, both TDA and Schwab have contracts with DocuSign. I'm sure they pay them big dollars. I don't pay anything directly to DocuSign, so I kind of don't get it since I use it every day. You would think I'd be being charged somehow, but I'm not. So you can see there it's down 22%. Here's the issue. DocuSign, I think, is best of breed in the space, but there's like 10 of these. If you're not using DocuSign, you can use something else, right? There's lots of things that do the electronic signature and have all the verification and stuff, which I don't know. I think DocuSign was probably cool 20 years ago or whenever they first came out. But now there's just too many copycats in the space. We'll pull the 1-year chart. You can kind of see the big hit here from 300. It was at 300. It's down at 68. I just don't buy, down 56% on the year. They're losing money. No dividend. I just don't, too many competitors in a crowded space. I don't see any reason to hold this stock. And I don't think it's low enough to load up on yet either. So overall, strong sell for DocuSign out there.
Thank you, everyone, for your questions. Please submit your questions as a comment through social media or directly to our email at vipservices@ankerstarwealth.com. And don't forget to like and subscribe to get daily updates. That's all we have for today's show. I'm Allison Ankerstar, and we'll see you back here Monday.